What's going on, guys? Welcome back to the channel. In this video, I'm going to show you guys one of my favorite entry models for trading the indices during New York session. If you guys like these kind of videos where I'm actually giving you an entry model that we look for day to day in the markets on the live trading sessions, give a like, give a subscription if you haven't already. When this channel gets to 10,000 subscriptions, I do intend on going live trading at least once a week going forward. And as the channel continues to grow, I'll do more live streams to give back, add more value to you guys. But it means a lot if you like it, if you're getting value in any way, shape, or form. It encourages me to make more videos like this. So without further ado, let's get into the charts. So a lot of you guys know that I am a smart money concepts trader, ICT concepts trader. So the terms liquidity, fair value gaps, SMT divergence, these are all things that if you're not familiar with, I would encourage you to go back into some other videos on my channel or other channels on YouTube that teach you guys these concepts and get a familiarity with the terminology and the concepts if you aren't already. Before we get into some examples on the charts, I want to just give you guys a quick little rundown of what I like to look for from a basic sense. So obviously right here on this chart, we are looking at the E-mini NASDAQ or NQ. So when we're looking for this setup, we obviously have our levels of liquidity, right? We have buy side and sell side liquidity that we're waiting for price to take out to then go target the opposing liquidity. And depending on the day, I may or may not have a bias on which one I believe will get hit first, but the trade entry model that I'm going to show you guys is going to be based off of one of these levels getting hit first and then simply looking to trade in the opposing direction. So, when price opens up during, opening bell or slightly thereafter, maybe silver bullet hour, and then goes and takes out, we'll say, buy side liquidity. Well, at this point, guys, the 2022 model would state that you want to wait for price to come down, right? Form some structure, give you a nice market structure shift below a swing low. And then you're looking to then target a fair value gap inside of that price leg, that displacement leg down with that market structure shift, get that entry, and then you're looking to take that trade down to the opposing liquidity, right? So that is the 2022 model in a nutshell. Now, I don't know if you guys have noticed this, but the 2022 model, you're not always going to get that specific entry model every single day. Sometimes the trade might play out in the sense of it might go take out one level of liquidity and then it will go take out that other level of liquidity, maybe just like you thought. But sometimes you're not going to get the 2022 model type of a entry offered in order to catch that trade. So for people that have went through the ICT 2022 mentorship, and if that's all you're looking for an entry model, that's totally fine. There's nothing wrong with that, but there definitely will be days that you'll miss good trades if that is what you're waiting for. So this could be another entry model that you can use if you can spot it in order to take that trade. So I'm going to just redo this real quick. So again, price opens up for your trading session whenever it is that you're trading. I prefer New York AM session. So price goes and it runs through that buy side liquidity. Now what can happen sometimes, guys, and a lot of you guys have probably experienced this, price never actually comes down, creates structure in the sense of it's going to create a low and then give you that market structure shift and a fair value gap for a 2022 model setup. Sometimes you honestly just get price that kind of just does this. You get one big, huge, impulsive move down, and then it goes and takes out that opposing liquidity, and you're left there with the thought of like, what am I supposed to do? I waited for my confirmations, I waited for that market structure shift, and because of that, I missed the trade that I thought was going to play out. And here is what I like to do on setups kind of like this. So what I like to do on setups like this is I will look at the NASDAQ and the ES side by side, and what I am simply looking for, guys, is I am looking for an SMT divergence. So this high right here that would be the form of buy side liquidity, right? They got ran through on NQ in this example. Maybe you spot at this exact moment in time that that high does not get ran through on E-mini S&P. Therefore, that would give you guys what? That would give you guys an SMT divergence. Now, if you're not familiar with that term, again, I would go back and watch. I have a video on my channel going over SMT divergence, but simply put, all that means is price is putting in different structure than what is being put in on what should be a correlating asset like the S&P 500. And before I show you guys an example on the charts from today, what I'm looking for when this happens is I'm looking for the very first displacement down, fair value gap entry offered. And once that fair value gap is offered, I'm not waiting for a market structure shift. I'm not waiting for that extra structure to get put in. I'm simply entering off of the very first fair value gap once I notice SMT present. Okay, so there is a twist to this though. You have to understand how to trade SMT divergence in order to do this, but you're taking the very first fair value gap entry. You're not waiting for structure. You're not waiting for a market structure shift. The SMT divergence is what takes place of the market structure shift instead of the 2022 model for your entry. So you'll have the liquidity sweep, you'll still have the displacement with the fair value gap for your entry, and then that is your entry point, and you're taking it down to the opposing liquidity. So the first thing I'm going to show you guys is the NQ chart from this morning, Monday, November 6th, 4 a.m. session, and price came up and it did what? It swept buy side liquidity. Now this is also really important to note. The only levels of buy side and sell side liquidity that I really put any significance on is always the previous session highs and lows. So London session highs and lows, New York AM or PM session highs and lows, and also opening range highs and lows the first 30 minutes of market open. If price does not take out any of those specific levels, then those actually then become my draw on liquidity. But I'm always looking for those levels specifically to be taken out and then have that yield the next reversal for what then becomes the next draw on liquidity. There is a little indicator that you can use as well if you would like. It's just called ICT kill zones and pivots, TFO. All it does, guys, is it annotates these different sessions. You have New York PM session highlighted here in purple, Asia session, London session, New York AM session, obviously. It also highlights New York lunch if you want it, and it annotates all the sessions, guys. So again, I'm mainly looking to trade New York AM session. That's kind of, my baby, my bread and butter. That's the session I like trading the most. And as you guys can see this morning, what we had happen is price pushed up and it took out Friday New York PM session high, buy side liquidity. So now that I've shown you guys this, I want you guys to see what I am talking about. So you have this buy side level that was taken out right at market open, New York opening bell, price runs up, sweeps that liquidity, amazing, fantastic. But when we flip over from NQ to E-mini S&P, you notice something a little bit different, don't you? You notice that same exact PM session high from Friday was not taken out. So what does that give you? That gives you this beautiful SMT divergence. So the way that you can actually think about that is you can actually then consider this high and this liquidity has indeed still been swept because it did sweep it on one of the indices. And you could maybe even use US 30, Dow Jones to, look at that in terms of correlation. I like to look at ES and NQ side by side for the most part. I don't really pay a whole lot of attention to Dow Jones. That's just me personally, but I'm sure there's plenty of you guys that trade these concepts that do. Now, what is important to know, you have to understand SMT divergence in order to really maximize this setup, because you want to make sure that you get inside of the right pair. So when you're looking at ES and NQ side by side and you notice that NQ took this level of buy side liquidity, but you notice that the S&P 500 did not, and then you see price start displacing down on both of those pairs, what you want to do is you want to then start looking for your entry on the weaker of the two, right? In a sell scenario like the one I'm showing you guys, right? So when you see this happen, you're looking for a short, not on NQ, specifically on ES, and I'll show you guys why it matters in just a second. So now I've dropped into the 1 minute time frame, and I've also went into replay mode, and I'm showing you guys where that push up happened. So we're looking at the S&P 500 still. Now you got to keep in mind, I'm in replay mode just to show you guys where you would identify your entry from. However, you also have to keep in mind that NQ has already swept this level. NQ's already swept this liquidity, and we have SMT divergence present. Why? Because ES has not yet swept that liquidity. So we can begin anticipating if there's a displacement down with a fair value gap, that we can actually use that fair value gap to then target the opposing liquidity, right? So if we just take this candle at a time, right, we're waiting for a bearish fair value gap to form with that displacement energetic move down to find our entry. So boom, we actually have that right here. We got SMT present at the highs, so that's one confirmation, right? We did sweep the liquidity on NQ, so we actually have that in mind. That's what creates the SMT divergence. We got this displacement down. We have a fair value gap. So what do? We have a great entry opportunity. We have a great entry model that is worthy of taking a high probability trade setup. So you can anticipate getting short inside of this fair value gap. What I would do personally is I would enter right at the beginning of the gap. If the gap wasn't like ginormous, you can use the 50% if you want, completely up to you. I usually just like going one tick into the fair value gap, stop loss right at the high. You could go one tick above if you want. And you're just simply looking to target opposing liquidity, right? So, you know, you can go ahead and target recent lows if you want. You could target this new week opening gap, which I have already marked up from before. You could target this recent low that kind of coincides with that gap. Or if you wanted to go crazy with this indicator again, you could toggle this bad boy on, jump up to maybe a higher time frame and go find your levels, right? You could go find this London low, this Asia low, really whatever you want. Obviously, depending on your bias, depending on the day, these things could change. You could use different targets at different times. I'm just showing you guys for an example's sake what you would look for in terms of opposing liquidity, right? You could look for the recent lows or anywhere in between. It's just all really up to you, right? Right now I have this thing set at the London low. Obviously the London session is a pretty high volume session that is pretty significant in the market. So just playing this out, waiting to see if price comes back and picks up that entry. Price does come back, triggers in that entry, whether your entry is right at the beginning of the gap or at consequent encroachment, and you just wait from this point to see how the trade plays out like always, right? So price goes down, sweeps this first low, just taps the new week opening gap, and chops around for a bit, see if it comes back up one more time. I believe it did. And then price continues to sell off from there, and it takes out the London low. If I remember correctly, that's pretty much all it gave for this move for that session. Yes, it was. So there you guys go. It goes down and it takes out opposing liquidity in the form of the opening range low, the London low, and this was a pretty clean and easy setup. In all honesty, guys, I missed this trade today because I wasn't on the charts in time. I usually start our trading session around 10 a.m. New York time. So we ended up actually catching this re-entry, and we caught this little move from this fair value gap down. And that was really it because we were getting in kind of late on the move. But this was definitely an amazing, clean setup. It is a setup that we do look for often in the Discord. And one of the members actually alerted in the Discord today before the Zoom call even started that this formation was happening. So it's definitely cool and awesome to see that people are picking up on it. And understanding that there is more than just one way to enter the markets and attack these setups, and it's not only just the 2022 model. But like I promised you guys, I want you guys to understand the importance of identifying the SMT and then taking the trade on the right one correctly, because this is exactly how that same trade would have played out if you took it on NQ or NASDAQ. So again, remember, NQ is the one that took this black line right here. This is the buy side liquidity. So that buy side liquidity got swept on NQ. It didn't get swept on ES. Therefore, all that means is that SMT divergence is telling us that ES is the weaker one. And it should give you a cleaner move, a quicker move, so on and so forth, or it actually gives you the move and it doesn't fail. Because watch what happens on that same exact setup here on NQ. This is why getting in on NQ would have been a mistake because of that SMT divergence. So again, waiting for the same thing. We're on the 1 minute chart here on NQ. That buy side liquidity sweep just happened. So what would you be waiting for again? You guessed it, right? The fair value gap. So boom, here you go. Got your fair value gap right here on the 1 minute chart. Same exact 1 minute fair value gap that played out perfectly on ES. And you again, what would you do? You'd set up your position, plan on entering inside that gap, stop at the high, looking again to target what? Opposing liquidity, opening range low, maybe you target these London lows, whatever it might be. And from that point forward, you're just, again, waiting for that trade. So you're waiting to see price pull back, boom, pulls back to that entry, boom, you're triggered in. And let's see what happens. Very next candle, literally, you're out and price pushes a little bit higher. So this is literally, guys, and then obviously the trade ends up playing out anyway, but this is why the SMT divergence is important. And you have to understand it, because if you don't understand it, you're oftentimes if you get in the wrong one, this is what can happen, right? You could have the right idea, the right trade, the right direction, but you just got in the wrong one because ES played out perfectly while NQ did not. But again, that SMT divergence is your indicator of which one to take. So that is obviously showing you guys a bearish example of that SMT divergence being at the highs from just today's market conditions. And if this is ever at the lows, guys, it's the same thing vice versa. If you see SMT at the highs, you want to trade short on the weaker one. And if you see SMT divergence at the lows, you want to trade long on the stronger one. But guys, just to recap this entry model and the checklist that you need for it, you still need a run on liquidity, right? And you still want to see your displacement towards opposing liquidity. And you still want to see a fair value gap left open for you to grab your entry. Now, the only difference is you are using the SMT divergence in place of your market structure shift. So go ahead, try this out. Maybe you'll start noticing it in the markets at this point. I just know that this is a great way to not miss a trade when it doesn't give you every step that you need for an actual 2022 model setup. And this can be a great way for you to get in those trades that do move a little bit too quick and they don't give you much opportunity or much time to identify and get in. But if you start noticing these SMT divergences popping up, that can be your first indication of a reversal that is about to take place. Hope you got some value from this. Leave a like, leave a subscription if you feel like I've earned it, and let's get that thing to 10,000 subs, because I'm excited to start doing some live sessions on YouTube for you guys for free every single week. I think that'll be a lot of fun, and it'll be a great way for me to obviously grow the community, get to know a lot more of you guys, and just give back and be of value and of service to you guys. In the meantime, this is one of the setups that we do look for live trading every single day inside of the Discord. I'll leave it in the comments and in the description. But either way, even if you don't join that, I hope this serves you and helps you out in some way, shape, or form and allows you to catch more of the moves that happen in the market every single day. But I wish you guys good luck, be safe, happy trading, and I'll see you guys in the next one. Peace out.